Good day, folks. Welcome back to the face-ripping reality that is the stock market with your host, the clown, the passive income investor here with a tale of two stories today when it comes to a dividend beast that has been tanking all year, posted earnings, lowered its guidance, yet is rallying. And then on the other end of the spectrum, we have a growth beast that posted absolutely gangbuster, phenomenal earnings, yet is down 10%. I think what we're going to start hearing is the jokesters come out with the new rhetoric that, hey, 5 to 10% pullback in the S&P 500 is entirely possible, says another clown, says a fool who has no idea and waits till the second day into a correctional period to be like, let's talk when the market's red, not when it's green, because nobody wants to be wrong and they want your clicks. I'm a clickbaiter. Heck, you saw my clickbait down there. You clicked on it. You want to know what's going on. I just made profit on Tesla. You're excited. You're like, holy crap, Kyle might actually know what he's talking about, but I'm just as much of a clown as the rest of you out there, and I don't know what's going on any more than the next guy, but we're going to talk about it. We're going to talk about it because tech stocks are definitely correcting today. We haven't gotten into the full scope of the earnings just yet, but what I think is hilarious is just like how negative people are about to become. Get ready for it. I remember just before I went on vacation here when the market tanked, I remember Jeremy, Financial Education, me, Kevin, they were all talking about stacking cash, being scared, getting ready for correction, more of a downturn, and we just had another face-ripping rally, and I threw all the money I could, baby. I threw all of it in here before I left, because I'd be gone for 3 weeks. I wasn't able to invest after the fact. I was like, I don't want to miss this. It worked out to our favor, didn't it? And we also took profit on Tesla. I mean, Tesla's now down to the 246 here, right? And somebody pointed something out about me selling this that is probably a better explanation of me than I would explain, but he says, basically saying, reading the comments, it seems people still don't understand that with individual holdings, Kyle is more of a momentum investor and not a buy and hold forever stocks guy. And there's nothing wrong with that. I have seen him do this repeatedly where he will buy a stock when it's hated and then sell it when the momentum switches and takes profit. Good on him. Yes, very accurate. But again, it comes back to a point too that I've seen so many stocks fail. I've bought in stocks that if I held them, I'd actually be down about 90% instead of making the 1,000% gains that we made. And with the exception of some big tech companies like the typical Apple, Microsoft, Meta, Amazon, etc., a lot of stocks have been absolutely destroyed. So I have this kind of built-in fear that, I make my analytic, like my own clownish delusional predictions on stocks. And I think if Tesla's cheap and I think it's going to go lower and I want to be buying it in this range, and then it does the exact opposite and rallies super aggressively, yeah, I am not going to be comfortable, especially when there's so much FOMO and people are like, you're going to miss out on so much by selling and blah, blah, blah. It's like, well, I'm more or less invested in the indexes. And I even took some of those gains and I bought SHD the other day because I'm feeling the momentum shift as the interest rate cut cycle begins to take off. And we'll maybe see another 1 to 3 years of a recovery. And many of the dividend stocks we love, many of which sit in SCHD, which is giving me more stability in my portfolio. I told you guys, my strategy is primarily just to focus on indexes, dividends, and the S&P. And then I will personally handpick stocks and manage them. And that will lead to outperformance if I'm good at what I do. And so far this year with 40% gain on Tesla, 18% gain on Google, we're doing pretty good considering the indices are coming back, and now even SCHD is giving us more stability to the downside. So congrats to those that held SCHD because it's been getting shit on against the market returns, but that's why I wouldn't make this a sole position, and I'm not a sole-oriented dividend investor either. But I recognize the momentum shift that is happening in the last couple of days, and if it continues and it is a new trend in the market, it's likely the bottom half of the market is going to start to reaccumulate some of the losses that we had in part. This has a lot to do with money market funds. And we've talked about this. This could also benefit tech stocks. I'm a clown. I don't know where the bottoms are. I'm surprised we're even selling off. Who the hell knows? Like, I just feel it out the way I feel it out. But you got to recognize that, just since 2022, mid of 2022, there's almost been there has been roughly almost $1 trillion added to retail money market funds. In basically total financial assets, we've seen roughly the same, like $1.5 trillion get added to money market funds. And these are just high interest savings accounts, bonds perhaps, maybe GICs, whatever. And that's going to be unattractive in the coming year. So people are going to start finding new homes for a couple $1 trillion probably. There's going to be trillions of dollars that have just, maybe been sitting around here that are looking for new investments that look cheap. So let's talk about it because we have a tale of two stories here. We have Johnson & Johnson and ASML. These two stocks are in completely different industries. Now, I don't want to give Johnson & Johnson the same comparable that I would to Pfizer because it's a much more diversified company. They have a multitude of sectors they have exposure to, so their stock tends to be more stable, but is down year to date. Was down a lot more. I mean, at the bottom here, we're talking about maybe a 9% correction, and now we're up 8%. We're almost getting back into the green this year. And even though Johnson & Johnson, they cut their full year profit forecast on M&A, I'm surprised that it's still rallying. I mean, they did beat on guidance when it comes to earnings and revenue, so that's great. And if we take a look, and I want to show you how momentum J&J is right now, because if you take a look at their dividend history on macro trends, and this is my favorite indicator for stocks at a cheap value. And we're talked about this with companies like TD, right? And some of these bank-oriented stocks. But when you take a look, over 3% here, we haven't seen a dividend yield like this since 2012 for a company like Johnson & Johnson. So just keep that in mind. We are living in unusual times for historically high yields. And it's this complicated debate of not being too sucked into it in a period where tech has performed so well, because you definitely missed out on gains. But again, we could potentially see a rotation. This is why it's so easy to invest in the S&P 500, because you'll get the benefit and you'll find the balancing, and you won't see the same downside risks. You also don't see the same upside returns. But honestly, is anybody complaining when the market is still up 18% this year? Now, when it comes to ASML, this complete other story, the other side of growth, this thing's down 10% this year, or sorry, today alone, right? But in total, about 13% from the total high that it was able to hit on this brain splattering against the wall, AI revolution that came out of nowhere and caught us all by surprise. And this only has to do with rhetoric coming out of Trump and geopolitics saying they want to cut, selling some of these machines and chips off to China. They want to maybe tariff it, do something, and it's essentially hurting the stock, but it has nothing materially to do right now with their earnings. So I'm just showing you these two stories to you because earnings don't matter. Rhetoric matters. What the fugaziness of the short term, where people are, again, talking to you about how they feel about the markets and these stocks, matters so much more than even though if you have great earnings. So keep that in mind as the rally we've had has been just exuberated, and this could be a potential breath. So I'm looking at companies that, again, I'm not buying these. I'm just saying, look at companies like McDonald's that have rallied aggressively over the last week, that year to date are absolutely slaughtered. There's some real opportunities in these if these stocks catch your interest. Again, for me, I like cost averaging into the indexes. It just makes my life that much more easier. And again, my total strategy and what I try and do is very simple. I just focus on the S&P 500, dividend-oriented ETFs like VDY, SCHD, and then I try and hand select at certain times in the market what I think is going to do well. That's pretty much what I've done here for the last little while, and it's done pretty good. I mean, we got good gains on Google and Tesla. Hey, it worked out great. If they tank enough, will I be buying them? More than likely. I might even start, looking at the Qs, maybe even look at the triple leverage Qs, TQQQ, if it drops enough, because I wish I took more advantage of the momentum. But who knows? Like I said, I never know what I'm doing any more than the next guy, and anyone that tells you he knows what he's doing is an absolute idiot. Honestly, it's like you got to feel this market out, man, and there's just no way to know if you're going to be right or wrong. But what I do know is if you ain't buying, you an idiot. You should always be buying this market. Be greedy when others are fearful. We're going back into a super opportunistic time where Meta's down to 460 again. Just, cognizantly make sure you're always buying the market. Take advantage of this stuff. You don't have to be an idiot. You don't have to be a clown like the rest of us on the internet here that are gambling. We're degenerates. Don't be a degenerate. Get your life together. This is a really great opportunity. If we see a big enough dip in VOO, may buy some more there as well. Who knows? Time will tell, but I'll pass the question off to you. I'd love to know what you think. And if you're joining me on this journey, definitely hit that subscribe button. But stay cool. Stay awesome, folks. We'll catch you in the next one.